Hello, everyone. Welcome to the Construction CFO Podcast. I'm your host, Rishi Srivastava from Being Human. Our guest today is Jordan Anderson from ACFMTX. Is that right, Jordan?
It's Anderson Construction Financial Management.
Thank you.
A lot of words.
Anderson Construction Financial Management. Jordan and I are going to go through an interview. Now, without further ado, Jordan, our first section is on your background and career journey. So, can you walk us through your career path? What led you to become a CFO in construction?
Yeah, absolutely. Thanks for having me on, Rishi. My goal wasn't to work in accounting in construction. I really did not know about construction. You kind of see an empty lot one day getting cleared out, and then the next day you drive by and there's a building there. Didn't really think about it too much, really had no idea all the moving parts that went into construction. My goal was to work in public accounting, and I assumed I'd be doing taxes. And that was the goal. And I was in school getting my degree in accounting, and a job opportunity came up for a general contractor that built elementary schools, junior high schools, mostly just school district and municipality work, right? All requiring bonding, which is something, at that time I did not know about. And I interviewed, and again, I had no experience in accounting. I did not have a degree in accounting. And for some reason, they offered me the job. So that was the tail end of 2007. And as you all know, what happened in 2008, the Great Recession, the housing market crashed. We went from having 3 to 5 general contractors bidding a project and being awarded maybe 1 in 3, 1 in 5, to having 15 general contractors show up bidding on small projects and maybe a bid ratio rate of maybe 1 in 30. So things slowed down tremendously. I stayed on until the end of 2010, and that's when I made the leap to go work in public accounting, which was the goal all along. This was just, a job to get out of what I was doing previously. So I worked in public accounting, and we were doing a lot of taxes, and we had a handful of clients that were construction clients, and we did reviews on those. And because I knew percentage of completion and WIP schedules, I was assigned to those clients. After the second tax season, I was just thinking, like, this is not how I want to spend the rest of my life doing taxes. And you just kind of feel like you're cleaning up the mess every year just for them to mess it all up again and having to go back in and fix it. And you talk to them, once a year, and it just didn't seem like you were adding value. You were more of a cog in the wheel, and this was just required because I have to have a review. I have to file my taxes. You didn't really feel that value that you were adding. It was just more of a compliance standpoint. So an opportunity came up for a CFO position for an electrical contractor and a commercial electrical contractor. So I took that, and I've stayed in construction, ever since.
That's great. So, Jordan, what was your first job in the construction industry and what surprised you most about it?
Well, the first job was my first job also in accounting. So, what I didn't have any background experience from working at other companies or in public accounting yet. But what surprised me is how you would have to have 16 different companies working together to build this new school, and how all these people are able to come together from different companies. I mean, it would be hard to tackle a project just within a company. And now you're expecting 16 other companies to all work together with all of their various employees and trades and complete this structure. So it was just really surprising, the level of planning and then communication and then just learning. I mean, you have architects, and then you have engineers, and then you have all the different 16, 20 different trades out on the project, and then a general contractor who's trying to, organize everyone. It's just the level of communication and everybody coming together at the end of the day and getting the job done. And that was just really surprising how that's even possible, with all that communication that happens. I think that's why I really ended up wanting to go back to construction, because of that communication. And you might have an expert journeyman electrician, master plumber, and they're both masters of their craft, and they come together and they have to communicate to each other. And the communication, I mean, maybe not always, but at some level, there is a respect for what I know and what you know. It's not one of those things, well, I know what to do in every situation. Like they understand the limitations of what they don't know. I think that's
Mhm.
probably the most important thing. I mean, for anyone to really learn is to understand what it is that you don't know, or that you think you know that just, isn't so.
That's interesting. 16 different trades. So, how has your view of the CFO role changed since you first stepped into it?
Well, I would say definitely more on technology. I wouldn't have thought that was what a CFO, would handle is any kind of, IT or technology or software or things of that nature. I mean, I'll have to admit, growing up, my older sister was the one who programmed the VHS system. So like I was not technical savvy
Mhm.
in any which way possible. And to this day, my wife is the one that usually sets up the iCloud and the phones and things like that. So I wouldn't call myself in that respect, but for the most part, the accounting ERP system is the number one system that construction companies are using. So you have to have some kind of capability to communicate with, the expert IT person and try to understand what they're telling you and try to communicate back to them, issues that are coming up and going on, and then allowing them to kind of process that and their judgment. So I think there was definitely a lot more involvement on technology. And I think that will, I mean, continue to be the case, especially in construction, unless you're having, a full-time IT person. But then again, that full-time IT person also doesn't understand, let's say, construction project management or construction accounting. So being able to communicate with people. So yeah, communication and IT related items as well.
Yeah. A CFO has to know so much about IT too nowadays.
Yeah.
Who had the biggest influence on your approach to leadership and financial strategy?
I would have to say that the CFMA, Construction
Hmm.
Management Association, was the biggest. Working at a company, I was the top level, accounting person. So there really wasn't anybody above me I could go to. The CPAs I worked with, a lot of times they had a hard time understanding, like, tell me again about this percentage completion adjustment, that's happening, and with the WIP schedule. So there wasn't a whole lot of guidance. It was kind of figure it out. So the CFMA was a great resource, attending every monthly webinar, reading Building Profits, taking a deeper dive into that with leadership, and then just books. Philip Campbell has a great book on cash flow forecasting for contractors. Susan Scott, Communicate on Communications. I think it's Communicate This. It's great for leadership because, I mean, leadership, as long as construction, all kind of relates back to communication.
Makes sense. CFMA is a strong pillar for construction finance. So the next section we have, Jordan, is on cash flow and financial strategy. So what's the hardest part about managing cash flow in construction today?
The hardest part, getting started.
Mhm.
That would probably be the hardest part. I mean, you have to get started. You just have to. Anything worth doing is worth doing wrong at first. And
Mm.
if you don't get started, you're never going to do it. And you can get started on it and everything's going to be wrong initially. And all the project managers are going to complain, say, that's not accurate. That's not how it is. And this is and that. And the owner's like, well, that doesn't make sense. But you keep at it and you keep refining that craft, and you're going to land yourself in some sort of relevance. It kind of takes me back to my first accounting job in construction, first job in construction and in accounting for the general contractor. I was there for maybe about 6 months, and I told him how much money he was going to make next year at the end of the year, which was a year from now. And he gave me a look like, there's no way. How could you know? I was like, well, I mean, I have the WIP schedule here. I know we're going to bill. I know our completion dates are. I know which ones will not be billed out based on the percentage of completion. And as a result, I know what our overhead is and the profit margins, and this is what it's going to be. And A year later, I was pretty darn close. And that's when I realized like it's fun to do, figuring out, forecasting where something's gonna end up. And it can also be, very insightful, especially if you're forecasting that you're gonna lose money. You can take steps today to lessen the hit 12 months from now. But if you don't know and you haven't gotten started, well, then it's just going to creep up on you. What do they say about bankruptcy? How does that happen? Slowly at first, then all of a sudden.
Yeah, yeah. So I mean, you're not just like a history teller. Your role probably is also like a forecaster here too, in some ways.
Yeah, absolutely. I mean, the WIP schedule is great to use that for, figuring out billings and what your monthly billings will look like based on, billing schedules and percent completion, and then analyzing, average AR days and AP days and, looking at those profit margins. But yeah, it's just a matter of, getting started. There's a lot of resources out there that can help you, especially the CFMA. They had several webinars on cash flow forecasting for construction that have been very helpful to kind of sharpen my knife, so to speak.
Okay, oh, makes sense. So cash flow and financial strategy, has that, the managing cash flow and has that evolved in the last 3 to 5 years?
There's a lot more, softwares available to manage that. And I think a lot of even the ERP systems, they have built-in cash flow forecasts. And they're canned out of the system. So it's not, I wouldn't want to 100% rely on it, but it could be useful as, to double check and to help you create your own forecast. And then, Excel has been kind of the primary go-to for forecasting. There are softwares now that can do that without the limitations of Excel, because, Excel, sometimes you kind of fat thumb something, you mess up a formula, you don't realize you did it, and you can avoid all that, with the software. But like with anything, that takes time to put in to build it and to continue to update it. And you don't want to have something that takes you, 2 days to update. You want to be able to update that within, a couple hours every month.
Makes sense. So how do you approach the balance between paying subcontractors promptly and protecting your company's cash position?
Well, I work for two general contractors, and most subcontractors understand that the general contractor is not the bank. And the general contractor really is a fiduciary of the funds for the project and receiving the funds and then dispersing it to the subcontractors and ensuring that you're paying people in a timely manner from once you receive payment. And usually, a contract will stipulate 7 days. Now, the last thing you want to do is remind the subcontractors about the contract, and it's like, we don't pay you until we get paid. But them understanding, like, hey, we've submitted it. I'm doing everything I can, following up with the architect to making sure that they signed the pay application. The engineer signed off on everything. They signed it. It's been sent to the owner. At that point in time, the owner may have certain cutoff dates, so I think the biggest thing is advocating for the subs and making sure the architect doesn't sit on the pay application for 2 weeks and then you miss the owner's cutoff deadline. It doesn't go into their next payables check run or ACH run until, a few more weeks. And now everyone, is 90 days until they get paid. And that's what it turns to. But in some cases, you do need to understand there are some subcontractors, and part of the bidding process, there may be some subs that you'll know that we'll probably have to advance some payroll at certain times throughout the project. And understand that you probably are making money off that contract as well, because you could have gone with the highest bid for that trade that has the working capital and cash flow already in place, but you took a risk, you went with the lower bid, and now as a result, if you don't pay them, they might fall off the job site, and then you'll be stuck trying to hire that top tier subcontractor to finish the work. So, I mean, it really is a balance. It's just about communicating. Um, Most subs understand that the GC is not the bank, but letting them know that you're doing everything and letting them know what it is that you're doing specifically on that project, following up with architect and letting them know what the owner's pay deadlines are and everything else, and just being as open and transparent as possible. Just, makes them feel better that they know, like, hey, once you get paid, I'm going to turn around and we're going to submit the ACH and cut that check next day. We're not going to sit on it for 2 more weeks.
Yeah, communication. So, what's your take on pay when paid clauses? Do they actually help contractors or create more friction?
Paid when paid, paid if paid, which I guess is not legal in all states. But, would you pay for something uh, that you don't have? I mean, would you, like who would say, hey, I want to pay you for this item and you're never going to send it to me, And I think individually we understand that. But at the same time, the general contractor is not the beneficiary or the owner of that project. If they're building, let's say, a hotel, once that hotel is complete, the general contractor is not receiving revenue from people booking those rooms, right? So the idea that the general contractor would have to pay the subcontractor if the owner hasn't paid them, doesn't make any sense. And imagine a world if you didn't have that clause or people didn't understand. I think the clause is just really more so people understand that they have to get paid. This is not their project. They're being paid by somebody else. So that way the subcontractors understand that they're not the owner of that project, to receive payments. It's just really, I think, a communication tool, if anything. Now, it's a different scenario if, the owner doesn't pay and there wasn't bonding, then everybody really kind of loses out at that point. But I think you would need to have it. Otherwise, general contractors would have to be the bank. And then the price would probably increase 20 to 30%. And then most general contractors wouldn't be able to bid it unless they were sitting on piles of cash and they owned a bank themselves.
Yeah, makes sense. Um, yeah. So next question is, how do you think about financial risk, whether it's tied to project delays, retainage, or bonding?
What was that first part again?
How do you think about financial risks, whether it's tied to project delays, retainage, or bonding?
Yeah, I mean, those are all definitely, financial risks on a project. Delays, especially for a general contractor, where you have your general conditions and the project was supposed to be completed in 12 months and now it's 18 months and you're carrying those general conditions for another 6 months. And yeah, good luck getting the owner to pay you for that, even though it was the architect or the owners themselves taking too long on making selections, right? So yeah, that's a risk. And what do you do about it? As a general contractor, you could maybe add in an extra 3 months as a safety net on general conditions just in case. But then you might outprice yourself, with that bid as well. So if anything, I would say that there needs to be clauses in the contract if the time goes over as no fault of the general contractor or subcontractors, but they should be paid, general conditions. And then retainage, that's a big risk for the subcontractors. If you have, it's a big difference between 10% and 5%. And if you're holding 10% on subcontractors, and the subcontractor has to pay out labor every week. They have to buy the materials. And as a result, that net amount that they receive needs to cover all of their expenses and their overhead. So the more retainage you have, the more profit margins that the subcontractors would need to have because that's going to be cash they don't receive. So I think paying out retainage halfway through a project is a good idea to kind of help that or include those clauses if possible, if the owner's available to that. And obviously the subcontractors are doing a stellar job and they're always out there on schedule, doing their work. But also, yeah, that definitely is a risk and it drives up the price as well. And what was the third option?
The last one's bonding.
Bonding. Bonding is sometimes, as long as a subcontractor has a bond program, and even though they're not necessarily bonding that project, if they have a bond program set up, that means that somebody else has vetted those financials, looks at it, and they're ready to bond them. And yeah, maybe the price does go up, 3%, but the general contractor is bonded and all the MEP trades are bonded. That would reduce the risk, but it comes with a cost because no one's actually planning on having to settle up with the bonding company and they fail, because that would cost time and money also, to replace that subcontractor. Yeah, all of those, yeah, absolutely. All of those things can increase the price for sure. Retainage, bonding, but for that peace of mind, it will cost more.
Next section is on technology and automation. Can you walk us through the key software tools your finance and accounting team uses daily?
Well, when I worked in industry, it would be mostly the accounting software, and Excel would be used maybe more as like a sandbox to plan. And I believe if you're using the right construction accounting ERP system, you will not be relying on Excel. And if you have the right project management system in place, and hopefully maybe it's included with your ERP accounting system, you wouldn't have to rely on Excel as much either. So having the right software, I think, really is key. I've enjoyed Procore. I think Procore is an amazing software. The biggest concern is the price. The price of Procore, it's expensive, and each year it goes up, and it's also based on a percentage of revenue. So I think it kind of gets people upset they don't want to use Procore, as a result. But that is, a great tool. I've always liked Sage 300 for construction and real estate. Sage Intact it's good. Also, it's cloud-based, Acumatica, Foundation, all great softwares to use. And some of them even just use QuickBooks or QuickBooks Online or Zero, and those can be used too. A lot of cases, you find yourself getting a software with all of these great options, but nobody knows how to use all these options. And so they're still using Excel. They're trying to do things themselves. So they're not really fully utilizing the capabilities. I use an advisory software called Fathom, and I'm able to import all the client's data after everything is reconciled. WIP schedules are created, balance sheet accounts are reconciled. I'll put it into Fathom, and that will help me save a lot of time with creating forecasts and management reports.
So, which tools are indispensable and which ones do you tolerate?
I mean, Excel for both. You will tolerate it, and it's indispensable.
Okay. So, what's one technology investment that paid off and one that didn't?
I guess, going back into industry, I would say most things that were implemented, thankfully it did work out. We didn't have any issues, and it remained to be that same way. We didn't have to revert to something else. The only thing I could say is, once you make a decision on a software, you need to stick with it. Because if you decide, like, after a year or two, it's like, you know what, it's too much, we don't like it, then you switch to another software, you're going to find yourself in a spiral. It's kind of like the logic used if there's three lines, and you get line one time, and you notice your line's moving slower. If you change line a second time, that might be optimal. But if you were to change lines a third time, you probably would have been best just staying in that first line. So I think just whatever technology you do adapt, stick with it. Make sure you really understand from users of that software, and find out what it is that didn't work the way they were hoping it would work, and finding that out first. So you don't go in blind thinking this is going to be a magic wand answer to all of our problems if we get this software, because that is never the case. You're living a fairy tale dreamland if you think there's going to be one software out there that's going to, solve all your problems. That's just not the case.
So, have you started using any AI-based tools for invoice processing, forecasting, or reconciliation? Why or why not?
There has been. I have a client. We used Chat GBT to analyze 6 years worth of invoices from a vendor, and that was interesting to see how they charge different prices on the same day in different branches throughout the United States. So that was interesting to kind of analyze that information. As far as actual AP, I've used the Sage product before with Sage 300, Sage Paperless, and kind of had like I guess it's called an OCR, and kind of recognize PDFs. And that was okay. But My main experience has been with being human and automating invoice processes with being human. And I had a client sign up with that, and that seemed to really streamline the AP process and automatically fill in. And you have a lot less errors when a machine is typing a number because, as humans, we're not perfect and we sometimes miss a digit or mistype something. And if you have 10 pieces of data you have to manually enter in, there's also that, redundancy. And that kind of leads me back also to Procore. Procore, if you're a general contractor, your subcontractors can be entering in their invoice, and all you have to do is approve it and then submit it to your ERP system. You don't have that double entry. Even though you may not think it's double entry within your company, it is double entry because somebody else had to enter it in, the subcontractor, and then you have to enter it again. So Procore can also bridge that gap if you're a general contractor and you have mostly subcontractors that perform the work. But as a subcontractor, I think, yeah, an AP automation tool that uses AI is definitely something to look into to kind of gain some efficiency and accuracy with the system.
What would it take for you to fully trust AI in your financial workflows?
Fully trust AI. If I pull money out of an ATM, I'm going to count that money right there.
Mhm.
So, I mean, which I guess is kind of funny because obviously the ATM never makes a mistake spitting out cash, right? But I still don't trust it. I'll still count it right there to make sure I got my money before I put it in my pocket. So fully trust, probably, never. I think you always need to double check. If you're not double checking, you're just assuming things are correct. And I mean, even ChatGPT tells you double check this information, it may be incorrect, right? And that happens all the time. And I think there's always going to be something that needs to be checked. But yeah, do I use, different AI like, Copilot and ChatGPT? Absolutely. 100%. And do I plan on using it more? Absolutely. 100%. I'm hoping that manual entry and bookkeeping is a thing of the past. You got to understand that 30, 40 years ago, before computers, you probably had 10 accountants in a room. One of them writing down with a pencil in the AR journal, and then writing the sales journal, and at the end of the month, closing it out. Computer comes along, it goes from 10 people to one person using a construction ERP system and a computer, and they can handle everything with just a couple of keystrokes, right? So even more so now, I think this will be the next, great leap. Well, it will eliminate humans doing data entry.
Yeah, that makes sense. If you could wave a magic wand and build the perfect construction finance tool, what would it do?
Magic wand. I'm glad you brought that up again because as we it doesn't exist. But let's say it did exist. And if I could dump a Gantt chart, which is, the project schedule, into that tool, along with our schedule values, the subcontractor schedule values, and if it could create a billing schedule and then analyze that contract with that owner to see how fast they pay on that project, taking into account that maybe that owner pays faster for hotel projects than they do on another type of project, or depending on what region or area they're in. If you can somehow figure all that out and then create a cash forecast for that project, and then do that, 100, 1,000 more times, depending on how many projects you have, and creating a master schedule with the cash flow. I think that would be the key because there would be, and then it could also integrate with the act and then make real time decisions like, well, we actually paid this one slow, but then they paid this one sooner and they got caught up, and they can make real time predictions for, future ones. And also taking consideration that retainage takes 6 months to pay up, and if you're a subcontractor, thinking about that if you were the concrete and foundation person and that project had an 18-month schedule, you may not get paid retainage for 2.5 to a year, right? So something that can just, drag and drop into the system, create it, and then replicate it, and then summarize it onto like a master budget with cash flow. That would be ideal. If anyone's listening and you're tech savvy, please make it happen.
Mhm. It must be a powerful magic wand. So the next section, Jordan, is on reporting, job costing, and ops. What's the one report you pull every week without fail, and what are you scanning for?
So when I worked in industry, I'm probably thinking working for a subcontractor. The one report is the job cost detail report, looking at number of hours put in that week on that job site, and looking also at any expendable tools and supplies purchased, rental equipment, and any, materials that are coming onto that job. And with that report, you can identify a lot of things, especially if materials are showing up charged of the job, but they haven't received any materials yet. And there was a large increase in materials, in that week. That would be a good question of maybe we should hold on paying for that material until we receive it. Also, maybe somebody's clocking into the wrong job because there's a big influx in, labor hours. So, at a granular level with the subcontractor that has labor on a job site, looking at those labor reports and making sure that, it makes sense, and that, that a right meter goes off if something spikes up too much in any given week, and realizing that. So that's definitely a report. At this point, since I'm not working in-house and I'm, consulting, advising subcontractors and general contractors, it's really more of a monthly thing. And it's really looking at cash flows, working capital ratios, and those would be the biggest things, indicators to look at for me. And of course, any underbillings on their WIP.
Hmm. How do you ensure your project managers or field teams actually understand and use the financial data you give them?
Well, I guess the first thing is understand that they're not using it at all, and they don't really understand what it is you're giving them or why this is the case and why I need to know that. So it kind of goes back to really communicating. And so they understand why it's important, and positioning, like, how does this add value to the project manager? Are we just doing this because accounting is telling us to? How is this adding value to my project? What is this information telling me that I don't know? I'm just going to show up, manage the project, do what I know. How are these numbers helping me? So positioning the numbers in a way that they want to see, maybe asking them also. If you ever try to implement a new software, and if you don't get buy-in from everybody who's going to be using that software, expect for the implementation to be the roughest ride of your life, because you're trying to tell somebody, no, you have to do it this way from now on. They're not going to be on board. So the same approach with project managers, ask them, what is it that you think is important that you'd want to see on these reports, and try to incorporate some of the information they're looking for along with the information, that's being monitored and measured, each week and each month, and kind of put that together for them. And that will help kind of create buy-in with the information that you're trying to. Don't force feed anybody, to pick up the spoon and feed themselves. So you're just going to put it in there, but don't feed them steak and lobster, something they like. Don't give them mush, they're not going to want to eat it. Right. So just
Yeah.
present it in a way that they want to understand. So they want to, and they're looking forward to those reports.
Yeah. The value communication. So, how do you handle cost overruns when a job starts drifting off track? What's your process for course correction?
Well, the first thing, some cost overruns. So you'd want to go back and look at your bid, the estimate, depending on your general contractor or subcontractor. Let's pretend this scenario that you're a subcontractor, you're having some cost overruns, you're looking at your WIP, your underbuilds, what's going on. It's showing that you're 80% complete, but you're only 50% build out, let's say, right? So you're underbuild, and you're looking at it, you're like, well, cost wise, I mean, there's no way we're 80% complete, right? They know that from a job site, a walkthrough, that they're not. So going through at a high level initially, and looking at your bid, and looking at what you had in there for materials, what you had in there for equipment, what you had there for expendable tools and supplies, what you had in there for labor, right? And then go through and identify, based on those budgets and where you think you're at, and, working with the project managers, figure out, is a cost overrun because of material, and just kind of start whittling it down to a granular level on the material. If you have to, look through every single material invoice quoted to that job. Maybe there's a material invoice that was supposed to go to another job, but somebody fat thumbed the wrong job done, right? Easy fix. Maybe you realize, oh, I remember what happened. We couldn't buy that material from that supplier because they didn't have any, because it's, during COVID, right? And everything's running out. We had to go buy it from another supplier and the rates increased. And so like now we are on the material. And so we do a post project, review at the end of the project too. If there's anything that went over during the post project review, and every single project, I recommend to do that, figure out what went wrong, things that went right, and try to apply that retroactively in your estimating, right? Because maybe there's expendable tools and supplies that just not really accounted for on, this certain type of projects or bids. So then going forward in the future, estimating knows about it. But you have to communicate. Project management has to communicate this information. Somebody has to identify it, right? And flag it. Then somebody has to go in, find it. You have to communicate from project management down to maybe even foremans on the job, and then back to estimating also, to make sure everyone's on the same page. So again, communication, and yeah, look at everything. Hopefully before, it's too late. If your purchasing manager sees that the bid is for this much and this was the quote, and they're buying it for a larger price, they should be jumping up and down, telling the project manager, and maybe, we can wait 24 hours and try to find a better price with another supplier somewhere else. Or maybe, you can lean on your supplier a little bit and try to negotiate a better price as well. But yeah, if you're always just in a position of hurry up and get it done, you're going to run into problems, guaranteed.
Very insightful. Does your ERP setup support the way your team actually works, or do you feel like you work around the system?
Yes, I would say it's definitely worked. Previously working inside, a construction company, our ERP system was a construction specific ERP system, and we were able to use that and work with it, and even, make additions to that software. I wouldn't say we had to work around. Again, is there one system that encompasses everything? No. So yeah, is there things that you might have to still kind of work through or work with in Excel? And it's like, yes, but that's only because you're going, above and beyond of the basic day-to-day things. So you're going to use, Excel as a tool, and, hopefully, with a little bit of help of AI as well.
Sense. So the last section here is leadership, people, and the future. What's the most underrated skill a construction CFO needs to have, and why?
Communication, being able to communicate effectively, because you can be some kind of, financial wizard or genius, right? But if you can't communicate and tell the story to other non-financial people, what good is that information, right? Because you're not the only person running that company. You need to communicate to others what things, maybe they're going well, and especially what things are not working well, and being able to communicate that and not just be an observer. There was something about, I think, a project management course, and it mentioned, are you a project manager or a project witness? There's a big difference. I think there's a lot of project witnesses out there. It's like, well, are you a financial manager or are you a financial witness? Are you just witnessing the transactions, or are you taking this information and telling a story and understanding the story that this information is telling you? And then are you extrapolating that information to kind of figure out where things will be? Because that is ultimately what you're trying to do. And I think in our very nature, we have a hard time figuring out what the future is going to look like. Just look at a video from the 1980s. They're going to be like, in the future, the year 2020, this is what the world's going to look like. It's comical. It's ridiculous. They're completely off point. We don't understand what the future looks like from the present. We just don't, So just taking a stab at that focusing on that forecast. I mean, especially when it comes to financial, you're going to do the best you can with what you know now in the present, right?
Yeah. Yeah. What's the biggest misconception people have about the CFO role in construction?
But they just, I mean, we don't need to involve them with project manager meetings. We don't need to involve them with estimating. No, they stick over there, in accounting. Leave them out of it. We don't want them there. They always say no to everything. We can never spend any money. We can't do anything. They're the bad cop. They're the mean parents. So not involving um is that's probably the biggest issue, just not involving the CFO. Whether, it has to do with human resources, warehouse, project management, estimating, whatever it is, whatever area, department you have in your business, the CFO, it'd be good for that person to have relationships with all those people and communicate, about what's going on. And that's the biggest thing right there. Just involving the CFO in every aspect of the business. If you want, think of them as an operations manager, just with a focus on accounting.
Hmm. Well, one thing is, you as a CFO are a lot of time writing the report cards of these project managers, right? Hey, you are a bad project manager. You are a good project manager. So, people are nervous with you.
Right? I mean, that's true. They can be nervous because of the numbers, that are being told. But if those numbers repeat in a bad way from project to project with a specific project manager, well, I understand why they're probably cautious, because they're being a project witness and they're not managing the project, right? And so it doesn't want to be called out. But then also, maybe, what they say, what's measured gets done, right? So what if it's being measured incorrectly? And that's when it goes back to the buy-in, where the project managers need to buy in also about how they're being measured on their tasks. And if they're not buying in also, and they didn't help, between, let's say if you had 10 project managers and you said, let's create some KPIs to see how well we're managing things. Well, a project manager that was just given a really low bid from estimating, that it had only a 5% profit margin, you know, is over here saying, well, I only have a 5% profit margin. This is going to skew all my other projects. Is going to come out bad. Like, well, we probably should measure that one, differently, because that one started off at a 5% margin. Or when you find out that estimating fat thumbed the number and they left out a zero, somewhere in that number, and all their quantities are off, or the pricing is off and things like that, well, they shouldn't be held accountable for that, right? There should be exceptions made. So I think just getting their buy-in and how they're being measured and what stick they're being measured with would go a long way. So it just really goes back to, again, communication and getting that buy-in from everybody involved. CFOs are not there to harm the project manager. I'm sure every project manager wants to manage their projects effectively. But if there is a project witness, if you have them buy in to how it's measured, you'll be able to identify that project witness very quickly.
So, last question here is sort of looking ahead 5 years. How do you see the role of a construction CFO evolving?
I think it will kind of continue the way it probably has been in the last 5 years, which is involved more in operations, more with IT, more with human resources, more in really all aspects of the company. I think that will continue. I'm hoping that it won't be just seen as, the bean counters keeping track of the costs and telling us that we're doing a bad job type of situation, but a strategic partner. I think it's already changed in the last 5 years. I think we'll just kind of continue to change. Like, oh, you know what? That is insightful, having the CFO being a part of these conversations that normally maybe wouldn't be, invited to.
Mhm. So, a follow up to that, Jordan, is what will separate top performers from the rest?
Top performers, top performing CFO in accounting, maybe in construction altogether. I think there's a mindset that somebody has, and there's a lot of very competent accountants who are controllers, and they keep track of all the numbers and everything is in the right place. and they're very good at that. They make sure every penny is accounted for and everything reconciles to the penny. And that is, what they're good at, and that is what they're focused on. And everything that they do is based off of their experience and what's worked in the past. The difference that separate, a controller from a CFO or, exceptional, but I think it could be an exceptional controller doing that, but it's the mindset that you're thinking strategically. You're not thinking, well, based on my experience and how I've done things, I'm going to apply that knowledge into this problem, this scenario. You're going to think, what is that magic wand tool I wish I had? And you're going to think, well, if I had that magic wand tool, what questions can I ask it? Or how would I set up the parameters for it in order to get the answers that I want? And so kind of thinking in those terms, because eventually we will only be limited by the questions we ask, right? So asking the right question, figuring out those questions, and then being able to, arrive to the answer. So not necessarily, it's not about knowing everything. It's about knowing what questions to ask and how to articulate, asking those questions and thinking strategically. And that is really what makes a CFO. And it's probably also what would make a great operations manager as well, that's thinking strategically, or CEO. For that example, the operations manager would be more like the controller, who's just making sure the operations are working, right? And making sure there's the machine is oiled and greased and the gears keep turning. But it's the CEO who thinks about purchasing that new machine and how would that look like, and what can we do, or what can we make, or where's the supply and the demand, and where are those things that are kind of outside the box. So yeah, just a strategic mindset really with everything you do, because it's not just limited to accounting, right?
Jordan, thank you so much for your time.
Rishi, thanks for having me on. Appreciate it.